Welcome to this episode number 63 of Your Next Trade, called today 100 Billion Move. So as always, we're going to be covering macro, we're going to be covering price action, what happened during the week, and what are the catalysts going forward. So let's start with the earnings season, where we had a lot of companies that came with their earnings over the last 5 sessions. We're going to have even more going forward, but if we look at what was the price action for the S&P, for the Nasdaq, we had obviously some macro, as we're going to cover today, with the PCE, with the GDP, but a lot of big companies, starting with Meta. So we had Meta Wednesday after the close, and the company met the expectations, but going forward, that they said that they will increase their capital expenditure. So that means going forward, earnings will be struggling a bit. And guess what? The stock was down on Thursday. But, just after the close on Thursday, Google, Alphabet came with the opposite numbers, very good numbers. And the stock on Friday was up 10%. So if you look at those two companies that are part of the Fabulous 7, which are now making 35% of the S&P 500, that means that, on any single day for those earnings, we had 100 billion move for those two companies, 10% move on above 1 trillion company. This is what you are facing these days. So what about this week? Not going into the year to date, but directly going into the week to date asset performance. As we can see for stocks have been very, very strong. We are talking 4% for the Nasdaq, almost 3% for the S&P. So risk on, you remember or not, like last Friday when we closed at 5,000 roughly on the S&P, we had a risk off. Why? Part of the reason was Middle East earnings, but more importantly, that was options and the option expiry. If you look at this week, you might have noticed that the S&P roughly close at 5100. I think it's 5099.96 something. And guess what? This is mostly because it's driven by options, and the big pin for the S&P was at 5100. So very strong week for stocks. If we look at the currencies, the biggest move has been the weakening of the Japanese yen. We are now at above 158. We're going to be discussing that a bit later. Copper, strong, making new recent highs. Why? Because the supply from China is cutting even more. So there is a bit of an imbalance between the supply and demand. And when you have a risk-on week, you have gold that is struggling on the week. So what about the week-to-date industry performance? The oldest winners, the leaders, are making the job again. We are talking about the semiconductors, up roughly 10%. Nvidia, all the names have been pretty strong except Intel. So Intel was down, I don't know how much on the close, 8% roughly after missing the earnings. Other end of the spectrum, as I said, silver, gold, pretty weak. Why? Because this has been a risk on a week. If we look at the sector performance, so I'm looking mostly at the week to date, IT, technology, consumer discretionary. Why consumer discretionary? Because of big chunk, 20% plus of this index is made of Tesla, and Tesla came with lower than expected numbers, but as the stock suffered quite a lot year to date, and they, as always, they are selling you what's going to happen in the next 6 to 12 months, even if most of the time they only deliver cars. The sector has been doing pretty well. So all the sectors of the S&P, the 11 of them, up on the week, with the risk on, the beta ones that have been outperforming. What about rates? Not much of a change. So if we look at the week to date, we have been roughly trading around 460, 470 on the US 10 years. There are some drivers that we're going to discuss now about the catalyst going forward. The 10 versus the 2, 33 bips. So more or less the same picture, a lot of noise. We had 3 big auctions. We had 5 years, 7 years, a lot of supply that we covered last week, 150 billion more, and the market digested pretty well this huge supply. What about the Fed funds rates? What are the Fed fund rates? This is a way to look at the Fed expectations going forward. So we have an FOMC meeting this Tuesday and Wednesday with the expectation on Wednesday. Market is expecting no change. And going forward, if we look at the December 2024 versus now, market is only expecting roughly 1 cut. So we went from 6 cuts in December, then 3 cuts. Now we are about 1 cut. Why? Because the market is more and more pricing inflation higher for longer. The 1 cut is versus what the Fed has been telling us so far, which is 3 cuts for this year. So there is a mismatch between the two. And if we look at now into the VIX 15.51, so that has been the big change. Last Friday we are at 18.7. So what happens most of the time when we have higher volatility through the implied volatility, a lot of products will be selling volatility. So by dampening the volatility, you have a positive effect on stocks, and this is what we saw at the start of the week and afterwards, especially on Thursday and Friday, with a lot of options, the weekly options kicking in. And as I said, there is no magic in the S&P closing at 5100. So now let's jump into the technical analysis, starting with, as always, with the S&P 500. So we had almost the reversal of last week, but as you can see, we are still inside the lows and the highs of the week before. This is the same for the Nasdaq. The Russell is telling us the same picture. So we are looking for the next moves. If we look at the big fabulous 7, they had a very volatile week, as we said, because of the first move, which was about Meta, the weakness on Meta, and then Google helped going forward. And I should have mentioned as well Microsoft, which was up 3 to 5% on Friday with very decent numbers, back to $4.15, $4.20 on Friday. Oil, lot of noise, not much of price action actually on oil. So there is a mismatch between the amount of news and tweets or social media that you will see and actually the price action. We had big major companies that came with earnings this week, so that was interesting. Copper, this is the one that has been making a breakout, and since then, going higher and higher. So if we look at the year-to-date performances of most commodities, they are pretty much the same, because there is a rush for hard assets, for real assets. Why? Because there is inflation, and it's hard when bonds are going lower to find a safe place, and commodities have been pretty much in demand over the last month or two, and it's not only for commodities. You see as well deals. So there was a big deal that was announced between Anglo-American, which will be bought. Well, actually, there is a bid. That doesn't mean that there's going to be bought by. But otherwise, gold risk off for this week. Euro dollar, a bit of sideways move, but this is the one that everyone is looking at. So this is the dollar yen. So dollar yen, since we broke the 152, it's pretty much like a stock. If you do a breakout, then you have the big move. So this is a weekly chart. You can see the size of this candle. We went from 154 to 158 and above. So we had the Bank of Japan on Friday, which more or less said, guys, we are not going to be changing anything. We're going to be keeping our policy the same. We are waiting to see for more inflation to change anything. And due to the differential between the US 10 years, which is roughly at 4.7%, and the Japanese 10 years, which is at 0.8%, obviously you want to own the dollar, and you want to be short the Japanese yen. In terms of positioning, CFTC, the commitment of traders, it's not extreme. We are getting there, but I think, it's clearly going to be a big one to look at for this week. Why? Because the market is closed in Japan on Monday and on Friday, so that means it could be a very thin market. In terms of intervention, we do have, potentially intervention coming, especially if we see more weakness. Another one that I want to mention is JP Morgan. So JP Morgan is back to pre-earnings release. So we are back to 193, but we went to 195. So very interesting in terms of if you are playing momentum as a trader in terms of stock. So what is a momentum is when a stock is down on the day after the earnings and underperforming the index, what you will do is you'll be going short those stocks because you are expecting this stock to be underperforming. We saw many reversals in banks. We saw in other sectors where actually the first move is not the right move. So for any momentum players, that has been a tough market. So let's jump now into what was this week about. So this week we had earnings, as we said. So earnings, what has been the price reaction? So this is here for the US price reaction relative to market. So actually, stocks in the US have not been doing they have been doing just like the market roughly versus when they came with earnings. Nothing really exciting. If we look at how this earnings season has been versus the average earnings season, we are roughly the same. We are beating by 78% on the EPS. What is interesting, we are beating more than usual, so 9.5%. So this one is a positive, but the revenues are not that great. So EPS, my view, as I said, is still the same. You can be playing with the EPS. It's much harder to revenue. So far, an okay season, not a great season. Same in Europe, and price action are kind of been your average. Bond supply market reacted pretty well. So if you look at the S&P chart for the futures, each time we had an auction around 6 p.m. UK time, market did okay. We are talking about stocks. We had lower, so that's for the macro, we had lower flash PMI. So this is really important because this week we're going to have ISM manufacturing and services and all the PMIs. And what we saw more recently in services are starting to come down. And that means, if 80% of our economies are into services, I'm talking the US, then we might be looking for slower GDP. So GDP, that was on Thursday, that was the first reaction that was there, where the headline number was not that great. But actually, as always, when you look at the GDP, you should be looking at the four components of the GDP and looking at them. Retail, let's say the consumption did pretty much okay, pretty good actually, and the adjustment were mostly coming from inventories and the struggling from the US economy to export, which makes sense if the overall world GDP is struggling. PCE on Friday was more or less in line, and the market kind of didn't move that much actually. So the implied volatility was pretty high on Friday. I think it was 1% going for the S&P into the numbers, where the realized when the intraday move that was not that much. What about the last one, which is the Japanese yen? So this is this one here. As you can see, this is the move on Friday. So Bank of Japan said we're not going to be changing much here. There was a big move, which was options related. So I read somewhere that there was a $5 to $6 billion yen option, and then the whole day the yen carried on selling. So this is to me the one to be looking at. Even if I'm looking at stocks, you should be looking at potential risk. Everyone is making jokes about I'm going to go on holidays in Japan, but this is a really important one when we have a currency that is weakening that quickly. Finally, and probably the most important thing, is the catalyst going forward. So what do we have? We have tons of macro, we get tons of earnings, so many drivers for this week. So first thing first, we are going into the end of the month, so you could see some rebalancing. Okay, so rebalancing between stocks and bonds. In terms of macro, what do we have? We have the ISM manufacturing on Wednesday, the ISM services on Friday, but we have as well the NFP. So far, NFPs have been holding pretty well. The reaction from the S&P on NFP numbers have been pretty okay so far because, we are holding the 250,000 every single month, but that needs to be compared with the comments that will come from the FOMC meeting on Wednesday. Expectations are for no changes, but it's going to be interesting to listen to the comments after, especially as in December, Powell was pretty bullish on the fact that inflation will come down. So it was like, it was transitory, it's going to be fine, it's coming down. Then we had 3 months of higher inflation than expected. Then the transitory becomes, don't worry, it's seasonality. And now it's becoming more than seasonality. So very important comments on Wednesday. On top of that, what do we have? We have, as we add in at the end of January, we're going to have the refinancing of the treasury. And this is important because that's going to decide, what is the supply coming of bonds, not only the size of the supply, but going into Wednesday, what are the maturities that they will be selling into the market? 2, 5, 7, 10, 30 years. And the market, if we are looking at stocks, there has been a strong correlation between stocks and bonds. And if we see too much supply, then that could become an issue for stocks. As I said, market in Japan is closed on Monday and closed on Friday. So what does that mean? Less liquidity, especially for the dollar yen. And finally, you have Europe as well that is closed on Wednesday. I'm talking continental Europe, not the UK, but that means probably less activity and less volume. Finally, obviously looking at earnings, and I'm interested in all those names. We are talking Amazon, we are talking Pfizer, we are talking Apple, we are talking lots of names. We are talking 85 issues for the S&P 500, which is making 1/6 of the S&P on for this week only. For the weekly straddle, I forget to put it, but my view is probably going to be between 1.5 to 1.8% going into this week. So many drivers, many catalysts. We are talking catalyst in terms of macro picture, in terms of price action, in terms of earnings, and in terms of financing treasury. So tons of things to be looking at. So it might be a very busy week. So this is it for me for today. Again, if you're not moving by 100 billion on a single day these days, you are barely moving. That tells you that the market is very much driven by this 35 to 40% of this fabulous 7. We saw this week the impact again of options after the options expiry. Volatility was dampened, a lot of open interest at 5100 on the S&P, and some magic happens, it goes down. So if you like what you see today, put a like, put a comment, join us on the trading community, where on Discord we got a one big channel that is free for everyone. If you decide to do the 4x4 video series and or the mentoring, you will have access to 20 more channels to get a professional investment process the way I've been building it over the last almost 25 years now. This is it for me today. I'm not going to see you next week, so I'll see you in a couple of weeks. Have a good trading week. Bye-bye.